Hey everyone, welcome back to Forex Cracked. Today we're tackling a question that every Forex trader asks at some point. Why do most Forex traders fail? If you're new to trading, or even if you've been at it for years, you'll want to hear these insights that could change the way you trade forever. Let's dive in with some common misconceptions. Most people think Forex trading is a get-rich-quick scheme. You see stories of people turning $1,000 into a fortune, and it's easy to get hooked on that dream. But the reality, it's just not that simple. Forex requires patience, strategy, and constant learning. Another myth? Many traders believe there's a holy grail, a perfect strategy or secret that will work every time. But in reality, there's no magic formula. What works today might not work tomorrow, which brings us to our first major point. One of the biggest reasons traders fail is a lack of proper education. Forex is complex, and if you're not learning and adapting constantly, you're setting yourself up to lose. Many beginners jump in without fully understanding even the basics, like how leverage works or what risk management means. Without this knowledge, it's easy to wipe out your entire account on just one bad trade. Take the time to educate yourself. Find quality resources, study technical and fundamental analysis, and remember, the market rewards those who put in the effort. All right, moving on to a big one, emotional trading. This is one of the toughest challenges for any trader, and even seasoned pros struggle with it. When emotions like fear and greed take over, traders make impulsive decisions. They may hold on to losing trades, hoping the market will turn, or they might jump into risky trades after a big win. These emotional decisions can wreck your account. Here's the solution. Create a plan and stick to it. Use stop loss and take profit levels, and try not to make decisions on the fly. Discipline is what separates successful traders from the rest. Another key reason traders fail is the lack of risk management. They go in with everything they've got on a single trade. Remember, in Forex, even the best trades can go wrong. Good risk management means risking only a small percentage of your account per trade. This way, even if you lose, you live to trade another day. Consistent, small wins are the path to long-term success. One of the most dangerous things in Forex trading is over-leveraging. Using too much leverage can amplify your gains, but it also amplifies your losses. When you're over-leveraged, a tiny price movement against you can result in massive losses. Keep your expectations realistic. Don't aim to double your account in a week. Aim for steady, controlled growth. So, what's the takeaway? If you want to succeed in Forex, focus on education, discipline, risk management, and realistic goals. Trading isn't easy, but with the right mindset and approach, it is possible to become profitable. If you found this video helpful, please like, subscribe, and hit the bell icon so you never miss out on our latest content here at Forex Cracked. Let us know in the comments if there are any other topics you'd like us to cover. Thanks for watching, and remember, stay disciplined, stay focused, and keep cracking the code to Forex success.